Well, hello and welcome to today's Flagler College Henry M. Flagler Society webinar on estate and gift planning. Take control of your financial well-being and philanthropic goals. We hope this session will help you learn ways you can be philanthropic as you plan your estate. It looks like a beautiful, sunny, warm day here in St. Augustine, finally, after a couple of rainy, windy days. And we have a lot of excitement on campus as Flagler College men's basketball team is off in Evansville, Indiana for the Elite Eight. So we hope you're having a wonderful day wherever you are. Before we get started, I'd like to share a few administrative items. Throughout the webinar, we invite you to type in questions in the Q&A box, which will only be seen by us. And we think the session will last about 45 minutes, give or take, may go a few minutes longer depending on how many questions there are. We will be recording the webinar, which will be available at a later date in the event you'd like to jump off, or if you may want to listen again later in the future. We've included our contact information on the last slide, so please feel free to email us directly or call us. We'd be happy to answer any questions that you may have. Before we get started, I'd like to go ahead and just make a couple of quick introductions. My name is Nicole Pache, and I have been with Flagler College for many years in different roles. And I recently returned after having been at the University of North Florida in the College of Education and Human Services, where I was the Director of Development there. And also more recently at Betty Griffin Center here locally, where I was the Director of Development. I'm thrilled to be back at Flagler College in the Institutional Advancement Office. I'd like to go ahead and introduce our speaker, Brad Gornto. Brad is a Florida attorney based in Ormond Beach with over 20 years of experience practicing in the areas of estate, trust planning, probate, taxation, and business law. Brad also devotes a significant part of his practice specifically to charitable planning for families. I'll also make a side note, Brad, that I know you have degrees from University of Florida, Florida State, and University of Miami. So he covers the whole state of Florida. His full bio here can be found on the slide if you'd like to learn more about his experience, education, credentials, and his contact information. Brad, welcome.
It's great to be here, Nicole. Excited to be a part of the webinar today. Thank you for the kind words, and glad to be a part of your event today.
Great. Thank you. So I guess we can go ahead and get started. It is a new year, and as we complete this first quarter, it's a great reminder to review your financial plan. Technically, I don't know if you knew this, but it's the year of the ox. And I'd just like to say that let's make 2021 the year that perhaps you fulfill your financial plans. And in reviewing the financial plans, we'd like to make sure that we bring estate planning to the top of the list. I think we know that life moves quickly and it's easy to forget how much can happen in a short period of time. We have arrivals of children, grandchildren, health conditions, asset purchases and liquidations, retirement, unemployment, remarriage, and deaths in the family, and they can all make a significant impact on the big picture of your estate plan. And Brad, you may have a thought too about.
No, without question, Nicole, everything you just said, but it's been a very interesting few years, obviously, and with the last calendar year, well, not calendar year, but full 12 months that we've had with this, the pandemic and an election, it's caused a lot of folks to think about their plan, what happens when they're gone. I've had a lot of people who were procrastinators stop procrastinating but update their estate plan because of many reasons. But if you think your plan's okay, the only thing I'd add is obviously with the change of the election, there's a lot of changes to estate tax laws and income tax laws. And of course, with the new Congress, if you haven't had your plan looked at in 3 to 4 years, just a lot has changed on the legal side. So it's a good idea to call your attorney, your CPAs. The perfect time to be doing that is right now.
Great. Well, we at Flagler have developed a free estate planning guide. You can see it here on your screen to help with that. And there's a record booklet that you can also use as a reference, and it's available to alumni, parents, friends, and it can be used to help you organize your plans and keep those records that are so vital. And it can be used as a basis for your plan.
Nicole, I just got to interrupt you. That is a tremendous resource that you offer to your donors, your families, your faculty, staff. When someone comes to see me, any estate planning is being done. If things are in order, it just makes the entire process much more efficient. And a lot of time I'm spending a lot of time in billable hours just helping clients figure out where everything is. So that's a tremendous resource that Flagler College offers. So I'm just giving you a little plug there. That helps us lawyers out a lot.
And it's easily accessible. So you can download it on the website yourself, or if you'd like to reach out to me personally, I can email it or send it along in the mail. So again, the website is flaglergiving.org, or please feel free to contact me again directly. And I'd just like to go ahead and kick it off to you, Brad, if you want to talk about some of the ways you can actually achieve these philanthropic goals.
Well, as Nicole has talked about, and we reference in the estate planning guide, it's common sense to make sure you put your wishes and memorialize them. No one likes to do this. I think the statistics that you might be hitting on later is less than half of the families have an estate plan. And I want to add a little tag to that. Everyone has an estate plan. It just may not be what your wishes are, because everyone has a default. The state of Florida and wherever you are in the country, every state has a laws of intestacy. That's what it's called. And that's how property rights and assets get distributed if you do not memorialize your wishes. Sometimes that is, basically the states take a guess at what the most common situations would be and what was likely your intent. Rarely does it match perfectly, and a lot of surprises. So, regardless of charitable planning and doing anything like that, you want to make sure you memorialize your wishes. And that probably doesn't need to be said, but I wanted to kind of set that at the 30,000 foot level there. And getting into charitable planning, which is for many folks an important part of how you want to leave your assets at Flagler College. Other charities are a part of who you are, and you might want to memorialize that. And a lot of people don't think about that. They say, I never ceases to amaze me. People say, I didn't know I could leave stuff to charity when I pass away. Tell me more. So the term bequest, which is kind of a antiquated term, it means, things that you leave for other folks when you pass away. People think of a last will and testament, but as we're going to get into these slides, there's all kinds of ways to give at death, not necessarily just through your last will and testament. That's one of them. But as you can see on the slide here, but stating the obvious, this is, you need your assets to maintain your standard of living now. Giving when you're gone is a way to do it when it won't impact your lifestyle now. It's very flexible and you can modify it. Nothing's set in stone. Many things allow you to retain control. You're always going to retain control, but there's some tools that we'll talk about that give you tax savings now, and you still retain control, which is very rare in the Internal Revenue Code. So there's all types of estate tax and income tax benefits that you can have. You can do this anonymously. You can do it in memorial for a spouse, a child, or a cause. Maybe there's you want to enter into a specific gift agreement with Flagler College, or benefit scholarships in a certain college or a certain need. It's just all types. It's really a blank palette of the ways that you can do it, but it is flexible and it's easy. And we're going to give you all some information now. Go ahead. When I mentioned they're flexible, again, in your will, or many of you might have what's called a revocable living trust, which is a substitute for a will that avoids probate. When you leave assets in your will, they can be as flexible, as specific, as customized as you want. And there's simple examples. You could give a specific amount, you could give specific property, classes of artwork. You can give your whole artwork collection or coin collection. It can be some real estate, a business interest, marketable securities. You can give, a lot of folks give a percentage. Some people will say, okay, when we get to the end of everything and all the bills are paid and all the debts are paid and Uncle Sam gets his, that's called the residuary of my estate, or the residue. Some people will say, well, I'll give 10% or 15% to a college, a Flagler College, or whatever their charities are. And it also can be contingent, of course. But the flexibility, and we'll talk about this, is really in when you do it through a will or a trust. And in the state of Florida, a will or a trust, there are some formalities in it, but if you already have a will or a trust and you just want to amend it, that is very simple to do. A trust has amendments, and an amendment to a will is called a codicil. So it's when you call your lawyer, you're not starting from square one, you're just updating some things. Any amendment or codicil has to be witnessed by two people and a notary. So never handwrite things in. That could cause huge problems. Fortunately or unfortunately, depending on your perspective, you do have to have a lawyer to do this in the state where you operate. But again, there might be a lot of reasons for you to revisit your estate plan anyway, for all the reasons that Nicole mentioned earlier. Or there's a lot of people moving to Florida. You might have some documents in another state moving down here. So it's very easy to integrate the language in a simple codicil or amendment to your trust. Go to the next slide. Again, when I mentioned earlier, there's all types of forms of bequests, one of which doesn't involve a lawyer at all. And I often encourage people who want to leave things to charity. I tell them, you don't need to come see me. You actually have good reasons to look to your other assets to leave to charity. And we'll do an example of this a little bit later, but a lot of folks, their biggest assets are the retirement accounts. And probably all of you know, that's just deferred income taxes waiting to be paid to Uncle Sam. Whether you update your beneficiaries on it, let me go back a second. What a lot of people do not realize is retirement assets will pass to beneficiaries. They have nothing to do with your will or your trust unless you choose to integrate them together. That's kind of a basic thing I want to make sure. So you could go see a lawyer and do a will or a trust, but somewhere with some IRA or 403B administrator, you've got a beneficiary that's 10 years old. That's who's going to get that. So beneficiary designations can easily be updated to say Flagler College. You want to make sure you get the language right, and we have a slide that has that. Same thing with life insurance. Oftentimes, very common, people don't need the life insurance anymore. It's paid up. Well, you want to leave 10,000 or 100,000 or 50,000 at Flagler College and start scholarships? You don't need to call a lawyer. You can just call your life insurance company, update the form, give them the language. And that's the easiest gift that Flagler College will ever receive because it doesn't have to go through the court system. We do have in Florida and in most states what are called payable on death accounts. That's rather relatively new vehicle, but it basically allows you to put a beneficiary on a bank account or a savings account, a mutual fund account, to avoid probate. That can be easily done. Some banks and some institutions have some restrictions, but that's a very easy and common way to do it. And again, it doesn't involve those pesky lawyers. So it's easier and less expensive. And donor advised funds, some of you may have them. This is the most popular philanthropic tool out there. Many of you have these already, but of course you can call the donor advised fund sponsor and say, look, we have fun using our donor advised fund granting out, but when we're gone, we want it all to go to Flagler College. That way you don't have, maybe you have children on as successors on your grant making on the donor advised funds, but some people just don't even get around to doing that. And if you don't, then it's going to go to the donor advised fund sponsor. So you want to make sure you have kind of a backup default beneficiary. So this is the sample language we were talking about, right, Nicole?
Exactly.
And this is extremely valuable to you as well. If you're going to update your documents with charities, you be doing your attorney and his or her paralegal, a very good service by giving them this language. You don't want to come in with a piece of paper saying, I want to give so-and-so to Flagler. Because there's all kinds of Flaglers, and you want to make sure you give the tax ID number. Not so much with Flagler College, but a lot of charities change their names, they move, they merge. It's a disaster waiting to happen if there's any ambiguity is to the charity. And so lawyers know that, and they got to spend time tracking all of this information down. So you want to make sure you give this to your lawyer if you want to leave assets in your trust. It'll save the legal fees or your will. And how do you do the beneficiary designations like we talked about? Just a simple telephone call. Doesn't matter if you've got $1 million in an IRA or just $10,000. There's a beneficiary that's going to get it. You just call your IRA custodian. You can go to the website and ask for the beneficiary designation form. And they're kind of, I'd say, rigid. Here, you don't have a lot of flexibility. You got to put a specific percentage or amount. You might have so-and-so going to kids and so-and-so going to Flagler College. But you want to make sure that they have the information there on the slide. You have to put that on that form. You can't just put Flagler, or Flagler College with no extra information. It could cause some problems. And Nicole, can you talk about that briefly as far as if they wanted to provide some customization?
Sure.
You don't have that flexibility in the beneficiary designation form, but you guys at Flagler can do some things, right?
Absolutely. And we suggest that you could include a letter of instruction, and we can provide some sample language for that. And depending on whether you would like to help with perhaps an endowed scholarship with your name attached to it, or you have specific criteria for your gift, we would like to draft a gift agreement with those instructions, because hopefully this will be realized far, far, far into the future. But we want to make sure that we have your wishes accounted for. And it's very easy to do. And we have people of all ages. We have a lot of young alumni, in fact, who are starting to do beneficiary designations. For example, when they start new jobs and their families are doing well, their parents are okay, and they will assign Flagler College as a percentage of a beneficiary. But we're happy to supply that language for you. Yep.
Perfect.
Please feel free to reach out at any time. And of course, if you do that, we want to celebrate you. We want you to share your plans with the college, and we want to recognize you, and we want to celebrate bequest donors of any age. In fact, you saw the previous slide with maybe one of our youngest Flagler Society members to date, but we have people ranging in all ages and who have given gift amounts from 1,000 and up to $1 million plus. So we want to celebrate you We want to recognize you, depending on a couple of other criteria. We may be able to recognize your gift commitment at a specific level. And then, counting your commitment will lend momentum to others joining in with you and becoming part of the Flagler Society, which is so important to the continued growth of the college and making an impactful difference in the lives of our students. And if you choose not to share your names with us, that's okay too. You can be anonymous, but we'd love to be able to celebrate you and or your spouse or partner in this prestigious society. And it's really easy to do. We just have a simple form. It's not binding in any way. It's just acknowledging that you are a member of the Flagler Society. And I can email that form to you again. That's available on the website, but it is very easy. It's not binding in any way. So in terms of some other strategic and charitable gifts, we can go ahead and.
Yeah, thanks, Nicole. There's a menu. There's a lot of different tools here that can be used. We talked about bequests, we talked about beneficiary designations, and we are going to do a simple example in a minute. This is just a chart I sent over to Nicole to kind of show, kind of the more simple ways to give at death and some of the strategic ways to give at death. And actually, some of these are lifetime examples as well. But this is kind of the menu, and I like to divide it, just so you know. Strategic is a little more involved, but accomplish more goals, but can achieve, there's no one size fits all, but this is kind of the menu slide. We're not going to have time to go through everything, certainly answer specific follow-up questions, but let's look at this example. Let's assume that you want to leave $100,000 to Flagler College, and you call up your lawyer and you say, I want to leave $100,000. I need to amend my will. I heard this guy named Brad and Nicole telling us about doing this. I want to do it. But let's assume you've got $500,000 of assets, or maybe just $100,000 of assets and $100,000 in an IRA. The idea is what I'm going to tell you is why it makes sense, if you have retirement assets, to not call the lawyer and do it through a beneficiary designation. So the first example, before you populate, again, they want to leave, let's say they have $200,000. They want to leave $100,000 to kids and $100,000 to Flagler College. Well, if you do this, you see in the example, when the kids get the IRA, that's deferred taxable income. So they're really not going to get $100,000. They're going to get $76,000, and Uncle Sam's going to get $24,000. Well, Flagler College is a wonderful institution, and one of the wonderful things about Flagler College and all colleges is they don't pay income taxes on their charitable mission and purpose. So if we flip it, go ahead and populate it. And then now, instead of leaving the bequest in the will, they leave the will alone and let that go to the kids, and then they leave the IRA to Flagler College. Then you see here, everyone's happy except the IRS, which usually is a good thing. And there's one, it's not rocket science. There's not a lot of math, but you would be surprised. And a lot of lawyers are not well versed in charitable planning. And when you call and you say, we need to update the will or trust, they say, well, great, we need to memorialize the wishes. And they don't sometimes ask these questions. So I'm not saying this is the right answer for everyone, but if you're looking to have more of your wealth go to things that you love, your kids and Flagler College, then every day, every single time, it's going to make more sense to use the IRA money to go to charity and leave your will or trust alone. So that's kind of a foreign thing that not a lot of people understand. I wanted to share that simple example.
And it's such a win-win for everybody.
It is. And I just assumed a modest, quite frankly, that's a low income tax rate of 24%. Obviously, if your estate or your trust or your kids are at the highest bracket, that number could be even more dramatic. But basically inherited assets pass free of income taxes. IRA assets don't, and that's the arbitrage you see there. It is a win-win.
Great.
Go ahead.
Well, and there are other ways to support the college as well, and using appreciated assets.
Yeah, and now we're kind of transitioning and pivoting and say maybe you're supporting the college right now. This is not to do with, this is a simple, smart thing to do, strategic way to give now or give annually. The Flagler College, if you give appreciated stock, and I'm sure a lot of donors are doing this already, you're going to get a full fair market value charitable deduction that you would not otherwise do if you had to sell that stock and get the cash. You pay capital gains.
Share this slide.
Here's the slide. Thank you, Nicole. Let's say it's $10,000 of stock versus $10,000 of cash. Selling it and giving the cash. Well, if you sell it and you pay the income taxes, you're gonna basically you give $10,000 worth of stock to Flagler College, you're going to save the capital gains taxes, or maybe ordinary income if it's non-marketable securities. It depends on what the tax rate is. Whereas if you sell the stock and then you give the cash, you're not going to enjoy those savings. Very popular that people give appreciated securities instead of after-tax cash dollars. And again, it can be done with real estate, mutual funds, bonds. The same would ring true if you were to give closely held business interests that are highly appreciated. That's a little more involved, or maybe some real estate LLCs, tangible personal property. This applies to in many situations as well. In other words, if you've got cash and you've got highly appreciated Coke stock or IBM stock or whatever, all things being equal, keep your cash, give Flagler College the stock. They won't pay capital gains when they liquidate it and apply it to your purposes. And then some other.
Sorry, I'll go ahead.
I need to mute that. I'm sorry. And another amazing way to give now, which is very popular. We got an adorable dog. I don't know the name of that dog, but it's adorable.
It's good, Ira.
Ira, that's Ira. Gotcha. Again, right now, this is another important way to think about giving now. This is not a testament. This is not a bequest. This is a way for you to give effectively now. And it used to be, a lot of people refer to this as charitable IRA rollover. It really isn't a rollover, but that's a term that it got stuck with. What it really is a qualified charitable distribution. If you're now, there's an exception for a little window. If you started doing this a year ago, it's 70 and a half. But now the law is once you're 72, you don't have to take those pesky RMDs if you don't want them. And as you've dealt with this in the past, that's ordinary income when you take your required minimum distributions, and that throws you in a higher tax bracket. If you don't need the income, it's going to screw up your Medicare premiums, affect other entitlement programs, maybe Social Security taxation. And so how this works is, instead of taking your RMD, and it could be up to 100,000. If you're married, it could be 100,000 for husband and 100,000 for wife. It's 100,000 per taxpayer. What you do is you say, instead of taking my RMD, I want it to go to Flagler College. It needs to go from your custodian to Flagler College. It cannot come to you and then you cut a check. It needs to go from custodian to Flagler College. If you do that, you're not going to get a charitable deduction, but which a lot of people aren't itemizing their charitable deductions these days anyways, because the standard deductions are so much higher. This is a wonderful way to give. If you have an IRA, and let's say you're giving $5,000 a year to Flagler College and you don't itemize and you're not getting any tax savings for your valuable annual gifts, look at your QCDs. This is all over the net. This is all over the internet. All IRA custodians allow you to do this. And I'm sure Flagler College is getting a lot of these days. Some custodians they give you kind of like a checkbook where you don't have to fill out a specific form, and it's very easy. It's really not a checkbook, but as far as doing this, you just write Flagler College and you send it in,
Right.
and they process it and do what they need to do. It only can be done from an IRA or a Roth IRA. It really makes the most sense for traditional IRAs. It can't be done from a 403 or B or a 401k. However, you can convert those if that's financially what you want to do, and then you could do it that way once it's in IRA status. This is a very common tax-effective way for people to give. Again, this is annual. This has nothing to do with beneficiary designations at death. Nicole, did you want to say anything? And Lewis the Lion there is pretty excited too about that, isn't he?
He's celebrating for so many reasons right now. He loves this idea, but he's also celebrating again the men's basketball team. Go Saints!
Go.
Making history.
So now we're going to switch to another area. This is part of the strategic giving. We're in the test. This is giving to Flagler at your death. So I'm going to ask the question, but did you know that you can make a significant gift to Flagler College and receive income for life? Well, of course, the answer is yes, you can do this. Again, the idea is you want to give to Flagler when you're gone. You and your spouse want to live off the income. You need the income. You're not ready to give it all now. Well, a charitable gift annuity is a phenomenal tool, especially in this low interest rate environment where CDs aren't paying anything, where you and or your spouse, it could be for another person as well, but we're just going to talk about you and your spouse. It works best if you're in your 60s, 70s, or older, but the what you receive is a current deduction. Do not miss this. You get a current charitable deduction for really what you're doing is you're allocating dollars to Flagler College later down the road. With some exceptions, the idea is that your payment to them is going to produce this income, and in most situations, except unless reinsurance is involved and other complex alternatives, the dollars will not be used for your purposes until you're gone. And the wonderful thing about doing this is once you do one of these, you add to your longevity. There's actually data out there that says if you do this, I mean, you live longer than actuarially, because obviously if you pass away in the first 5 years, shorter than your life expectancy, Flagler College gets that money sooner to follow your wishes. But if you live to 110, you're going to get these payments. And Flagler College, you could unpack that a little bit if you want, Nicole.
Well, I was just going to share that we did have a donor. He was thrilled. He was one of the first people who made a charitable gift annuity, and he actually did it with a portion of a real estate property, and he transferred that portion to the charitable gift annuity. And he was thrilled. He said, "This was so easy. I saved all of this tax money."
Yeah, the capital gains are avoided.
Capital gains were avoided. And he automatically, right into his bank account, had income 4 times a year, quarterly.
Yep.
That he has since passed away. His wife is still receiving that income.
And you need to put another bullet point on here and saying this does not involve one of those pesky lawyers. You can put that benefit on there. I can say pesky. This is something that you do with Flagler College.
Oh. And I think we have a chart.
Yeah, here's a beautiful chart. Again, you can do it with cash, but the real bang for the buck, and I remind me to come back to the cash thing in a second, Nicole.
Okay.
The big thing, the best way to do it is take appreciated stock that otherwise you'd have to pay capital gains for to diversify and get income, or real estate. You make an irrevocable gift of that in exchange for this charitable gift annuity agreement. It can be on your life, it can be on your spouse's life, and then after your death, whatever's left passes at your direction. You know, if you had some wishes you wanted to do with, or as an unrestricted gift. I went to the rates on this. You might be asking, okay, well, what's the rates? The rates are fixed by the American College of Gift Counsel, whatever it is, the American Council of Gift Annuities.
Gift annuities, yeah.
And if you're 70 years old, the interest rate, or not the interest rate, the annuity rate that you get is 4.7%. If you're 75, it's 5.4%. If you're 80, it's 6.5%. And if you're joint lifetimes, let's say you and your spouse are each 75, it's 4.6% for both of your lifetimes. And Nicole, I believe you told me before, Flagler College doesn't have to follow the promulgated rates, but you guys do, correct?
We do. It's the standardized industry standard, if you will, for charitable nonprofits. So we do abide by the American Council on Gift Annuity Rates.
The one thing I wanted to mention here, there's a neat rule. We don't have a slide on this right now, and I want to circle back. I should have given this in a slide. If with the COVID bills and all these packages, if you give cash to charity right now, you get 100% deduction for that these days. And what is neat, Nicole, is for some of you who might like this strategy and you fund it with cash, I don't have time to get into this, but the deduction that you will get from it is you do get the 100% AGI deduction for cash funded CGAs. There's a little more to that. I'd be happy to follow up questions on that, but there's some really good opportunities here. There's a couple other life income gifts that can be used, but the chart, again, the chart, you give it, you write the gift annuity, you guys get income payments, you get the tax deduction. Part of the payment will be taxable. Part of it, as you get these payments, part of it will be a tax-free return of your original investment. Part of it will be capital gains, and there's a possibility part of that income payment will be ordinary income, but it's just partial. And then
again, this is a win-win.
Yeah.
You have life income as well as making a significant gift to the college. Yeah.
And they call these life income charitable gifts. There's CGAs, and I think we have another slide in a second. I don't know if the next slide is the summary chart. Yeah, let's just go. Then we'll get back to question. Go ahead and populate this whole thing. On the right, you see strategic charitable gifts. Well, we had time to cover charitable gift annuities. That's what we just did. Other strategic life income gifts are down at the bottom, charitable remainder trusts, which are a little more customizable. I didn't mention you could do a deferred charitable gift annuity. You might want to do one and you don't want to start drawing the income for 5 or 10 years. You could do that with a CGA when you need the income, and it'd be a higher percentage. Charitable remainder trusts are very popular ways of doing the exact same thing. From a donor giving profile, giving at death, lifetime income, they accomplish the exact same thing. It's just with a CRT. You retain those assets in a trust that you control. Everything goes to Flagler or whatever charities you want at death, but there's a little more customization to it. But some of you may be familiar with charitable remainder trusts, and there's a bunch of different kinds. Pooled income funds are out there. Those are similar life income gifts where the amount goes to charity, and then you get income for life, and you get a large upfront income tax deduction. The other two on this list, charitable lead trusts, is a strategic way to give annually. Let's say you give annually $10,000 a year to Flagler College, and that's just what you do, and you want to continue doing it. A charitable lead trust is a wonderful way to accelerate or front load the charitable deduction for multiple years of gifts annually to the current year, because you had a spike in income, or you sold a business, or you converted an IRA to a Roth. If you're an annual giver, charitable lead trusts are very powerful strategies right now because interest rates are so low. They give you basically the entire deduction, almost the entire deduction in year one, but you're only giving charity annually. That's what a charitable lead trust is. And then at the end of the term, it comes back to you, or it can go to kids. I would be remiss if I didn't mention the other thing on the strategic side. Some of you may have a house that your kids don't want. It's going to be sold when you're gone. Maybe you want to leave your house to Flagler College at your death. Well, this is amazing. What you can do is the IRS, let's say you have to do a deed, and you do a deed. It says, okay, basically, I want to retain the right to live in the house and retain the right to, furnishing it and pay the bills. It's yours during lifetime, but at death, it just goes to Flagler College outside of probate. They just record a death certificate, and then they can sell the house and simplify probate and leave an amazing gift to charity. You get a deduction today for doing that. And a lot of people, again, that needs a deed, but basically if you're 60 or 70 and you leave the house to Flagler and you retain the right to live in it, and there's usually a co-ownership type of arrangement that you enter into at Flagler College regarding maintenance and taxes, but usually, almost always, you retain the right to sell it and maybe reinvert, but the idea is you get a deduction today for the promise of leaving your house to charity. So in a lot of circumstances, instead of doing your will and saying, well, I'm going to leave my house to charity. Well, if you do it in your will, you don't get any tax savings. If you do it in a deed where you're giving that remainder interest, which is effectively the exact same thing, you're going to get an income tax deduction today, very large, probably half, depending on your age, half to 75% of the value of the property itself, which could be hundreds of thousands of dollars. I want to be mindful of time, and I've been talking a lot.
12:40, we're doing, well, that's an incredible gift, a great option.
On the left there, you see the simple stuff, the beneficiary designations, the payable on deaths, the life insurance beneficiaries, the gifts of appreciation. There really is a bunch of different ways to give and memorialize your love for Flagler College. And I know for a lot of you, the college is in your DNA. It's part of who you are. You graduated from there, and the whole purpose of today was to help you guys, memorialize, make sure your estate plans are memorialized, but the extent Flagler College is in your plans, just know that there's all types of flexibility that you can do. And there's our good friend, Henry Flagler, right there. And what a perfect example of his legacy. You want to talk about the Legacy Society a little bit there?
Sure. And again, a reminder that anyone can be part of the Flagler Society. We have people of all ages, all gift ranges, all gift vehicles. It is simple, very simple to do. We have over 200 Flagler Society members presently, and they're all over the country. And they've taken the time to think about how they would like to leave their legacy and make an impact on the future. And it's a wonderful gift to do today and to think about the future. We have special events that the Flagler Society members are invited to attend, either through the college events or specific to Flagler Society donors or members. We have a newsletter, the Planning for the Future, that goes out twice a year to our members. We recognize those who would like to be recognized among this prestigious group of the Flagler Society members. So a lot of different ways that we like to celebrate you becoming a member.
I imagine a large part of that, Nicole, too, is you get to know the donors and they get to know you. That allows them sometimes to further customize their wishes and, memorialize maybe certain programs they weren't aware of. It's just a wonderful way to further integrate with the college.
Exactly. Yes. And so important. That's a good reminder that if you do have a specific area of support that you would like to help with at the college, that's something that we would like to make sure that we take care of on our end and have you memorialized in that way and remembered. And I'm happy, if you'd like to have additional materials customized for your specific age or goals or assets, I can provide that information to you. In normal times, I may be traveling around the country and happy to meet with you individually and talk about how this and ways that you can help with the Flagler Society. I don't know if there's anything else that.
Oh yeah, it looked like there was a question that came up. Yeah, there's our contact information, but if you want to leave the contact information up there.
Yes, this is our contact. If you want to consider us a resource, Brad is available, and myself, my contact information is there as well as Brad's. And we'd love to take a minute to answer some of the questions that have popped up. Brad, it looks like, oh, there are a couple. Here's
There's a funny one that just came up, but we can take them one at a time.
okay, yeah.
Mark Gornto, I think, is a remote cousin of mine, Steve. But that's funny. It's a unique last name. I love Flagler College. I swear, I love St. Augustine. That's one of the few colleges I did not get a degree from, but I'm a Henry Flagler nut, and I love Florida history. And of course, that's Grand Central Station for Flagler history and everything. So while I don't have a degree, I didn't attend. I think Mark is a second cousin. So it's a small world.
And then it looks like we have another question.
That's a very good question.
Life insurance, aren't life insurance benefits, even if paid to another person, and retirement account assets among assets included in your estate value at death for estate taxes? Perhaps you can speak to that.
Without question. And estate taxes are very punitive. They don't affect everyone, but that might change in the near future. But yes, life insurance is income tax free, but if life insurance that is on the decedent's life, so if you die and you owned the policy, then the IRS will subject it to an estate tax of 40%. The good news, for lack of a better term, is right now, all of us on the call have a lifetime exemption. I think it's like up to 11.58 million, or maybe it's 11.7 million index for inflation per spouse. And that takes almost everyone out of the picture. The bad news is no matter what happens in Congress, whether they pass legislation or not, that's going to expire December 31st, 2025. And in 2026, the exemptions are going to go back. Index for inflation, they'll be somewhere around 6 million per spouse. And that still doesn't affect most people. But where the unknown is where that exemption is going to lie in the next, this congressional cycle we're in now. President Biden has said that, who knows where it's going to land, but possibly reducing it to 3 million per spouse. And the estate tax is assessed on everything: life insurance, your house, retirement assets. And that's a separate tax of 40% in addition to IRA assets, income taxes on IRA assets. And that's another reason why giving your IRA and leaving it to charity, if you're subject to estate taxes, the effective tax on an IRA is upwards of 70%. Because if you're paying estate taxes, you're going to get dinged on income taxes. There's an interrelated calculation. But Van, that's a very good point. We didn't have time to hit on that. If you're subject to estate taxes, then really it's a matter of just answering the following question: do you like Flagler College better than the IRS, or do you like any charity, anything better than the IRS? Estate taxes are incredibly punitive, and an easy way to avoid them is dollar for dollar leaving things to charity at death. Really glad you brought that up, Van, because we didn't focus on the estate tax hit that many people do face, and many more in the near future. When I started practicing law in 1999, the estate tax exemption was $675,000 per spouse and a 55% estate tax rate. So we've never been at the highest levels now. So it's very realistic for it to come back to more traditional levels. And charitable planning would become much more important for many folks if those exemptions do come down. Great question.
I don't know if there are any other questions. I don't see any that have popped up.
Okay. Well, I can stay on for a few minutes if anyone is thinking of questions, or if you want to privately email me, my email address is right there. I know some of this stuff might be more of a private nature, but
sure. And if there are questions, that come up. We're happy to answer them here at a later time as well, between both Brad and myself. We will send out this information via email, and thank you for your questions. Brad, thank you so much for taking the time to join us and share your wonderful knowledge with us on this webinar.
Well, it's been my pleasure. I'm glad I could help, and I hope I hope you, all the attendees, and all the people who get the recording, have had some takeaway value from this. You're doing your donors and your friends and your families and faculty a great service by providing this. Encourage you to talk to your professionals, financial planners, accountants, your lawyers, all of whom can help you memorialize some amazing ways to benefit Flagler. I was smiling as well because Steve put in the chat, go Saints tonight in the basketball tournament.
Yes, yeah, big
So,
win. We're setting hopefully some school history here with a win. So again, thank you so much. Thank you to all the participants who joined us, and we appreciate your time. And thank you, and goodbye from Flagler College. Thank you.
You're very welcome. Y'all have a wonderful day. Thank you, Nicole.
All right, take care. Thanks.
Bye-bye.